Good evening, good night, good morning, good afternoon. Not sure where you are in the world, but I hope you had a good Labor Day weekend to pretty much reset um, and just kind of get back some of your free time. It has been a while since we got to do one of these, as I was in the transition of moving out. But here we are. We have a relatively short watch list this week. Um, Market kind of feels like it's in a point of confliction, so kind of went a little bit safe with the names that I liked for this week and pretty much picked more of the names that have kind of that momentum or just overall better order flow on the higher time frames. And without further ado, let's go ahead and get started. So the first name on our watch list is Match Group MTCH, ticker MTCH. And the reason I really like this is just because of how the weekly accumulation is starting to, take shape, right? You have this really long base that gets established until you get a very strong delivery that takes out your lows from 2023, right? And what I like to talk about is when you sweep highs or lows, if you're looking for those quote unquote reversals. It's all about the delivery after taking out those significant lows or highs, right? So you could see how we're kind of in a, I guess you could call this a long consolidation range until you get that breakdown. But then look at what it does over the course of the next few months. That kind of delivery is important. That to me now solidifies this area here as a strong order block, right? As a strong refined demand range. And we can kind of highlight the screen just to kind of give it a little bit more context behind the color. But we had that really aggressive broadening low, swept our 2023 lows, and then we had a really strong push into now new highs. So we went lower low, higher high, right? And what I like now in terms of how it's developing is you have a double inside week against that prior displacement. And we are doing it at a previous breaker. So this is all super important to me because of the context, right? What it did, this was the last significant high before you established those new broadening lows after a major liquidity sweep, right? And then you have the aggressive delivery that now established an inside 2 week against those previous highs. So the context behind this is we have a strong breaker paired with a really strong weekly fair value gap. And because of the change in the structure, this is also known as your unicorn model in, you know, ICT terms. I don't know why it's called unicorn, but it's when you have a breaker paired with your inefficiency off of your initial structure change. So I really like this 2 week development. I would love to see a little bit more basing, although you do have the double inside week. So assuming you can kind of stay above the 34s, I really like this to kind of give you that price push into the 42s and even as high as 43s. So my guide is pretty much the 2 week, and as long as we can stay above this inefficiency that we created, then I would like to target the 42s. Now, granted, if you do retrace, we do have a nice anchored low and anchored high now, right? So assuming this is a bit arbitrary because I don't know where the retracement is. This is not enough retracement to kind of confirm this is a proper swing high, as this is just a point of consolidation that can still give continuation, right? So I'm not entirely sure, but if it were to pull back and we were to lose 34, then this would be the alternative scenario where we come down to the, you know, low 30s, mid 31s, and then try to get that higher low established back up to where you then set a nice inverse head and shoulder off the bottom of the broadening. Now that's the alternative scenario, assuming if this pulls back. Now this is arbitrary because this is not really a corrective move against the original impulse, right? This original expansion hasn't really slowed down yet, and although it was a red week and it was a close under your last weekly close, this is still not significant enough because you can still base. It's relative to where it held, right? Um, so I really like this. I really like the kind of the Wyckoff accumulation models here. Double inside week, inside 2 week, really good context to where it held. And if it doesn't, we know what to look for. Another one I really like is also UNH. And I like this because, sorry, this is just previous drawings. I really like this because of the buildup, right? So you had really nice consolidation that broke down into new weekly lows. Remember y'all, when you're looking for reversal structures, you have to look at it from a broadening low or broadening high perspective. And those broadening lows and broadening highs have to have some major, liquidity sweeps, right? And when you get those major liquidity sweeps, is how is price reacting? So I really like this because so if I zoom into the 2 hour, right, and we come down here, I really like this because you break down, you establish some pretty good strength, and then you get exhaustion at lows that then continue. So instead of trading lower low, you pretty much held at a higher low on the 2 hour and you actually established a really nice trend change here, right? So you got proper establishment off your 618 that then dominoed into the higher time frames, which is now why the daily looks the way it does. And we have a really powerful gap up that was obviously caused by when um, uh, what's his name, Buffett bought a stake in this, I believe. If I'm mistaken, please correct me. And now you have really nice compression. So really nice development here above a really strong gap catalyst that is supportive of buyers, and it's also relative to the range of what it used to be, right? So buyers flip to sellers, now back into that range, showing really strong strength here on the daily. And same for the weekly. The weekly was also really, really strong. And the context of a gap with a aggressive weekly displacement, back-to-back candles that do support buyers. So I would like a preliminary target into 327. And when utilizing the daily, that does line up with your previous month highs, which does also complete this PMG. So initially 317, 322, 327 would be my targets short term, as long as this gap that was created by a really strong catalyst continues to hold. So really nice short time frame compression that is starting to develop in favor of buyers. Another one is SOUN. Now I have been talking about this one for a while. We are in a swing that is doing really, really well already. Now I would actually like to get follow through and a roll up just because of how we did develop. So all things aside, we have our swing low to swing high. We did get the retracement. Now this isn't the staircase type of retracement where it's like, compressing and absorbing both buyers while kind of stop hunting one side. This one was a bit more aggressive, but we did still come into your open gap, which was an earnings gap. Also lines up with your 618/golden pocket of the potential higher low. So if this is going to develop, this could be the initial higher low that does potentially trade price back into new highs. So for me, I'm kind of watching to see how we can continue to develop against the 618. And you can kind of go into a window of basing here, right? Um, you do have a volume imbalance to target, so I would like to see a little bit higher, but then I would like to see, so when you have the external leg, this is kind of what I would like to see take shape, right? So you have this weekly leg, weekly leg. So if this is going to be like the projected higher time frame expansion, I would like to see maybe like some internal development that does something like that and kind of establishes proper structure within the hourlies that correlates with the higher time frames. But I really like how this is looking. I do really like now that we've created a really nice volume imbalance within that supply here. So where you had a lot of that selling pressure, we did get a really strong body close above, and we have a really nice volume imbalance that does support buyers. So for me, as long as we can continue to hold like these low 12s, I would like to see this eventually trade out right into that weekly. Now all you really need now is a reclaim of 1363 to kind of invalidate this weekly leg and pretty much give you that daily higher low into the 17 plus. But really nice push so far out of that. I would like to see some continuation, and if not, I would like to continue to accumulate in between the 11 and 12s. JD, this one is hated by many and not loved by most, but let's go into the 2-day. Whoops. Just to give you a better image here. So when I'm in the 2-day chart here, you can see like this period of consolidation that is just continuously taking out your sell side, right? And now we have a really strong push up that was followed by a gap up. A gap up that reclaimed the bottom end of that range. So this area here now in between 30 and I guess this 30-31, just call it that, right? It will now act as a potential spring if you look at your Wyckoff accumulation models. And if this gap is now going to be in support of buyers because gap ups tend to support buyers, gap downs tend to support sellers, which is why you saw this kind of wick down. But we have a potential spring based off of the liquidity that we did sweep. So if it does manage to act as that spring, we can anticipate a move into at least, low 33s, high 32s. So I think the risk reward on JD actually looks really nice. And the weekly ended up coming back into the range. So again, if that ends up holding, that is that potential spring. Because why would they bring it back into the range? If this was going to be a true breakdown, why not leave it down here, then get the retest and break lower? They pretty much put it back all the way into the range after sweeping out all those weekly lows, right? So this is setting up really nicely. I would like to see a little bit more development into the gap down, because if not, then when we zoom into the 4-hour, you can still continue your hourly structure, right? And so on and so forth. So that gap has a lot of work to do, but it is showing some pretty nice stages of buyers trying to take back the steering wheel here. Disney, I really like this on the shorter time frames. So when I go into the 4-hour here, you have a really nice gap up that was also through a gap down. So you can see we did now take that out, and we did it with really nice aggression. And then I really like the fact that we used that gap up and wicked off of it with a really nice wick here. And so for the most part, this would be more of a short-term trade, and my targets would be somewhere in the 121s if this develops. Now the key is against this gap. So as long as Disney can stay above that 116, can we get some really nice buildup to then trade into those 121s? Pretty simple trade, doesn't need any more explanation. Another one that's kind of still holding to, and I do believe this one's still setting up for higher, is Citigroup. And that's because we have displacement at a area of importance, right? So let's mark this out. Sellers, sellers, we displace, and now we wick. We displaced through an area of importance where the selling pressure was really aggressive, right? Every time, look at that, push down, push down. Now we actually displace through it, right? So for me, when I look at this, is as long as we can now develop above like the 95, 95 would be my break point. As long as we can stay above that 95 point, I do believe this can now flip the narrative of where you developed for a few days and broke down, developed for a few days and broke down. And now I believe we can actually, is there a way to flip this? No, sorry. I thought I could kind of flip. Can I do this? Oh, no. Nope. I thought that was their way to like mirror the image. But anyways, now can we pretty much build and base to potentially break out higher and change the narrative of what it once did to what now it could do, just because of the fact that we actually had proper displacement through that area of sellers, right? And when we zoom into the hourly, you have really nice buildup, similar to how it did here and then broke higher. You're kind of doing the same repetitive nature here. So I really like Citigroup, and I do think it can still show a little bit more continuation. And ultimately, my targets, my higher time for targets for this would be somewhere 101, 102, 100, 102. But it could still go through a few days of consolidation before trying to break out higher, potentially. ABBV is very similar to kind of Disney. And I believe you are inside on the week with displacement. So I'm going to eliminate these drawings just here for a little bit. Weekly displacement that countered a supply range here. And I'm going to annotate this red. Again, displaced through it now inside week against a strong move. And we still have, I mean, you did sweep it, but now they're kind of relative equal highs here at 212.45. And I believe the 2 week, right? Displacement on the 2 week. And now you have compression. So that's really nice buildup on the daily. So if you do break down, I still think it's buyable. So like the two scenarios I'm looking, even though you did get daily displacement here, is you get this and then trade higher, or you go for one more sweep that then trades higher. But ultimately, regardless of the direction this takes first, I do think ABBV is setting up for a potential all-time high move here. Really nice 3-day and really nice 2-day development. But what I really like the most is that weekly hammer that pretty much held. And this can go through periods of kind of ranges. So understand that ABBV could trade within 199 through about like 212 for a little bit longer before trying to go for that break. But really, really good development here. Another trade that I'm keeping an eye on is Honeywell. And the reason I am keeping an eye on this is the 4-hour. So we have exhaustion at lows, followed by a gap up and displacement. And now we're just getting some internal buildup here. So if this is going to be my proper established swing low point, I would like to see if you go for some kind of internal buildup that then breaks out. It would offer really good short-term risk reward. So I'm going to be keeping an eye on Honeywell as we approach the, 218, 217 mark. We did just get that internal sweep here, and we are retesting a previous breaker where you did identify those exhaustion lows that did not continue. So there's going to be some good confluence. And if you do start to wick, then you look for the delivery out, right? Just because you're entering into your discount zone does not mean, oh, it's going to immediately reverse. Remember, you have to pay attention to how those reversals take shape. Right? Are you getting wicks? Are you getting aggressive pushes against it, et cetera, et cetera? So please keep an eye on Honeywell as we do start to approach this, because it could set up a really good higher low. Just remember, when you're taking into account this structure, and if I bring this out, right, lower low, lower high, lower low, lower high, higher low, higher high potential. So can this establish that higher low to change the structure a little bit? The next one on the list is RKT. And I'm going to go to the daily here. So this one has been in a really clean set of higher lows, higher highs. Now we're kind of in a little point here where you do have a gap that's trying, whoa, what the heck? Excuse me. You do have a point of a gap here that's trying to be supportive. And it has been kind of basing nearly every time it's come back, and you're pretty much stuck in a bit of a range here. But what I think makes the most sense, if I were to get the entry I would want, we get a daily range sweep that retests the gap and then breaks higher. Now it doesn't have to, it is inside day, but this inside day is kind of what acts as that trigger, right? We had a day of consolidation where both sides were getting absorbed. Now I do think the real move can come, and that move sets up a trap that then trades higher. Um, I really like it. You're also double inside weak. So it doesn't have to break down, right? It doesn't have to. It can trigger and push up back into the 20s, 21s areas, whatever. But if it were, this would be that alternative scenario. But I do have a bullish outlook on RKT. It's just going to more so come down to, are we going to go for an external stop hunt before trading? Are we going to trigger that double inside weak? Then that sets up a wick that recovers back into the range and then trades out. Okay, so that's kind of what I would really like, just because of this little range here. I would love to get a really nice sweep that retests the open gap. And I bet you if that happens, then you establish a good, so from this swing low to this swing high, right? It kind of lines up from the higher time frame structure. Another one I'm looking at is shop, and these are the two alt scenarios that I have. So you either continue to build here, trade higher, or once again from swing low to swing high. Let's change this into, why is it not letting me? Oh. Let's do this one. Yeah, there you go. So again, this is your earnings gap, aggressive gap up. Look, I love this kind of development because it's very tight compression, which is fine with me. You did get a little bit of daily displacement. It just means it needs a little bit more work. But again, I love what can present itself here because you have a previous high lined up with your post earnings gap and your 618 of this impulse here. So we know that when we get those retracements, this is a proper area to identify a higher low. Now, Abisai, why did you potentially have a scenario here? Well, that's because when we zoom into the 4 hour, you have potential development against this aggressive candle that pretty much goes against this corrective move. So now you have internal buildup with a gap up. So if shop does not break below 136, this is thrown out the window because then this development leads you to pretty much trade higher and you target that 150 gap. Right, so there's definitely that to keep an eye on if we don't get that proper break under the 136, because now you have a potential scenario where, oh, we have a displacement candle, you establish a higher low, now you're getting buildup within your internal range to potentially trade higher. But if it does break down, then we go back into that daily and we'll be like, oh, well, we have the higher low swing down here. So this one has two alternatives, and then one's really just depending on, can we break under 136, then we get a true higher low that then we can trade back into the 150 plus. ABT, this one's probably my favorite chart for the week. XLV is definitely a top priority for me for this week, if it, obviously if the momentum continues, but I don't really need to show you anything else other than that this is a triple inside week coming off of a weekly displacement paired with an inversion gap. And the reason it's important to me is because this displacement gave you new 52-week lows. And then this displacement was countered with displacement. So we have a powerful fair value gap that is now flipped into a bullish one. And obviously it's already been cleaned up, but you have a really strong, I guess, context here for buyers. And now you're triple inside on the week, the inside 2 week, and just really beautiful daily development that's already trying to break out, right? And you have a nice volume gap now that you can use as your advantage. So if price ever trades into this, you know it's supportive, and triple inside on the week. So I'm pretty much looking to see if this gives kind of a wick down. I would love to get an entry within the 130, 131 area. You even potentially could do 129 if it stays within the range, but then my targets would be that 134 into 137. Beautiful, beautiful chart. I love the higher time frame. And another one that's very similar is low. Home builders still kind of look the same. Whoops. Low inside week. And really nice compression here on the daily. This would be more of like a short-term trade that either we look for a pop into the 260s to see if they fail. And if it doesn't fail, you start to get a push through 263 that then dominoes into the daily and gives you a PMG all the way back up into 270. But really nice like kind of build up here that I really like. XHB didn't look terrible either. Apart from ABT being one of my top priorities, my top three would be RKLB and then the name that I'm talking about next. And the reason is because you're getting another inversion gap, right? This is why I talk about when you get deliveries off of broadening lows. Broadening low that was established by an aggressive gap down or aggressive delivery down that then gets inverted. Now you have an inversion gap, and look at where you had all of that selling going on right here. And I'm going to overlay it. This is why it's important to understand the context of what price used to do, what price did to get where it's at, and what price could do. And now we're getting some proper development. This is such a clean chart. Proper development, back-to-back days where buyers are holding where they need to hold. You have the inversion gap created with a gap up, right? Displacement down in new broadening lows. Why did we recover the way we did? So for me personally, I do believe that this is kind of setting up to give you new all-time highs. Such a beautiful chart, and the context behind it should be really all you need to know about this. Just put it into context this aggressive move followed by the aggressive recovery back, and now the development above your breakers and that aggressive move down. Right? So as long as RKB stays above 43, 48, like that, this whole range here, I think is the buildup for all-time highs or previous month highs, right? And then the next one and the last one is ASTS, and I will be using the 4-hour here. And it's very similar to RKLB. Aggressive sweep, the delivery back, that also creates another inversion gap, and I'm gonna pretty much just lay it like that. Do I have one? BPR, inversion gap, whatever you guys want to call it. They're all the same to me in my opinion. I guess not. I'm going to make this purple. Okay, and so now we have this overlap, we have the retest, and if this is going to be a proper change in development here, look at where you pairing your inversion gap with. You're at your discount. So ASTS has the potential to establish that trend change to then go back into the 55, 56 areas. This one just needs time in my opinion, but as long as ASTS stays above the 44 mark, I do believe it can set up a higher low here and trade out back into 55s. But such a clean chart just because of what we did here, what you did to get there, and what you did afterwards to now potentially establish a higher low. So yeah, pretty short and sweet, straight to the point watch list. Again, I usually try to keep these under 30 minutes. For most of you who follow me, you already know kind of a lot of the things that I talk about. So I don't really want to like spend too much time trying to, break down everything time frame by time frame. I do want to announce that coming this winter, ideally like late November, early December, I am going to be starting my my market your method, or my method your market series, where I'm going to pretty much break down a lot of the things that I do episode by episode, and all of your questions will be answered. So yeah, hopefully you guys enjoyed this week's watch list, and I hope you have a great week. Don't forget to, like, comment, subscribe. Let me know if you have any other questions in the comments. Let me know what other videos you'd like to see. But other than that, hopefully you guys kill it this week. And that's it. See ya. Peace.